Good afternoon, traders and investors. Will back here with another one. Hope you guys are doing very well here on a Wednesday afternoon. And the markets continue to dip and continue to slide. And now in just a few days, guys, we've erased a lot of the last 2 or 3 weeks in trading in a lot of indexes and stocks. So are the markets still healthy? That is what we're going to look into today here, guys. We're going to take a look at our major indexes, of course, as usual, do the full breakdown, take a major look at our tech names as well, and give a little bit of an insight into this little dip that we're having here. Is it a very juicy buying opportunity after we've been warning for it in the markets now for the past week and a half on the channel? Guys, I'll remind you that this is no stranger to us. We were expecting this early January dip. We called it pretty much starting about a week ago here, where the bulls were getting tired. And even last Friday's video, we highlighted the fact that we had a 9-week in a row rally and that we were potentially due for a technical pullback. And that was also lining up with some early profit taking into 2024 by institutions and retail, because last year had so much gains that people would potentially want to take some money off the table, defer those taxes for an extra year by selling in January as opposed to in December. And that's exactly what's manifesting here today. So I'll remind you guys, this is a buying opportunity in my opinion. We should be excited for this. Everybody who's missed out potentially on the November and December rally that was happening in the markets, well, we now have an opportunity to buy these dips on some weekly consolidation. And it is really just that, guys. The markets are looking very healthy. This is just healthy weekly consolidation. We did have a bit of data come out here today. We had the Fed minutes and we had a bit of economic data as well, but the economic data was actually good. So we take a quick little peek in here. Oops, that's the wrong one. So we take a very, very brief look into the economic data here. We had the ISM manufacturing data come out a little bit. Hope you guys can see this, guys. This first column here with the A is the actual numbers come out. The F is for the forecast. So the manufacturing PMI actually came out quite bullish here today, guys. Very good read, 47.4, beats the expectation. That means that manufacturing is strong. But also, the manufacturing prices, look at this drop in manufacturing prices. So this is very good for inflation. Another sign that inflation is coming down. Your manufacturers are getting lower and lower prices from their suppliers, and they're transmitting that to the consumer, you. So very, very good. We also had some JOLTS jobs opening. This is something that the Fed looks at a lot to see how tight the job market is. And the jobs market was fairly tight, coming in a little bit below our expectation here by a couple tens of thousands of jobs. But that's just very fine here, guys. Not a very big drop in the read at all. The market is still fairly healthy. And the FOMC minutes, guys, really wasn't much changed. The Fed just highlighting that they continue to be data dependent and that despite they hinted at rate cuts, they will still be data dependent going into the future meetings. And they once again reiterated that they don't want to be too tight on the market. If ever labor conditions do deteriorate this year, they don't want to have rates too high and have a rather accommodative stance for that potential drawdown in your labor market. That is what they're worried about. They're really focused on two things, inflation and the job market. And now with the job market slowing down ever so slightly over the past 2 months of reads, well, that is what is pushing them to potentially be able to lower interest rates this year. That, and coupled with the fact that inflation is well on to their target, despite some elements, of course, still being sticky. So all that to say, guys, the data that come out today was actually good data, but the market sold off anyways. It's just continuing our technical pullback here, guys. That's nothing more, nothing less. I know that you may hear about a lot of external catalysts to the market that I don't bring up on the channel. For example, I don't talk about the Middle East crisis that much. I also didn't talk about the Red Sea crisis that much. We always have many, many crises going on a yearly basis, guys. Unless they are truly worldwide geopolitical events that change the shape of the market, such as the 2020 pandemic, we will always have these miniature catalysts happening all throughout the year, guys. What we have to focus on here, most importantly, is that the market is built on earnings and expected cash flow. And unless you have a massive worldwide event that disrupts one of those two things, the markets are going to continue to just treat these temporary issues here. And I'm not saying they're not important. I'm just saying that they're temporary. The market will continue to treat them as just that, temporary events that they will price in ever so slightly and then continue their march forward as long as the global macro environment continues to improve. And in this case, it's all about a question, guys, of your global inflation and your global supply chains, and everything is looking a lot healthier than it was 2 years ago. And that's pretty much the moral of the story. So this technical sell-off is just that. That's why it was very, very easy to predict here about the institutional rotation and repositioning into 2024. But just keep an eye, guys. We cannot discount the last 2 months of rally, right? That's why on last Friday, we did the market closes here in terms on Friday, we did the monthly closes, excuse me. And I showed everybody that, listen, we are in very healthy monthly uptrends across all of your major indexes, even financials setting it as well. Healthcare looking very, very good for the monthly breakout as well. All of your major indexes, guys, are not showing any signs of weakness on the long term. So these short-term technical pullbacks do represent some very juicy buying opportunities for the rest of 2024. And this period right now in early January is where I personally am going to be shopping for a lot of beautiful companies at some discounts. And it is also the period in time where I will be shopping for my leap call options when we start fizzling out the momentum to the downside, start hitting more of our larger support areas, not only on the indexes, but also on major tech names, I will definitely be shopping for some deals in the form of call options, because I do still believe that 2024 is going to be a very positive year. And I'm very confident in the fact that we are most likely going to end up higher than where we are right now. So that's the moral of the story here, guys. It is a juicy buying opportunity, but once again, we just have to be patient with it. Don't jump the gun too fast. Just be patient with it. Wait for the market. Wait for your companies to come to you. You see all of these support zones that I draw? You can do the same thing on your charts for any company that you like. A few of them that I'm doing right now, Fortinet. If Fortinet comes right back down to my $55 mark, that is when I'm going to jump the gun here on Fortinet as well. You guys have also seen me buy a few companies on the channel recently at decent prices, like the names of pretty much Starbucks. I also like Nike as well, but these are some that take a bit of time to recover. Alibaba as well is one. One of the similarities that Baba, Nike, and Starbucks both have in common is their exposure to the Chinese market. And I do believe that despite the most recent China woes in terms of their slight recession that they're having, and reduction in GDP and reduction in exports, I do believe that 2024 will be the recovery year for China. So I'm trying to be forward thinking in terms of that and waiting for the market to recover while picking up these companies at juicy bottoms, right? So that is pretty much the moral of the story here, guys. It is time to build the shopping list, and I'll bring you a lot more stocks than that in the next coming few days here. But now let's get right into our technical analysis, shall we? So that was a little bit of an intro. Hope you guys appreciated the slight transparency and slight pat on the back. Don't worry, it's been a very, very healthy last 2 months, and I do believe that the following months will be all that better. So SPY down 0.82% on the day, QQQ down 1% on the day, and all of our major indexes ending red. We haven't seen that in a while here, guys, so it must be notable to us. And all of our major indexes being red signifies money just rotating out of the market. People are just simply pivoting and they're waiting for the market to come back to them. This is most of your retail, most of your institutional players who have taken a lot of profits, and now they will wait to reposition, which is something we talked about yesterday as well. In terms of the heat map here, you can see that all of the market was pretty much in the red except for healthcare. Healthcare held up better than most, but for the most part, guys, another big day of red. Broad market selling off in the market as a whole. Not much was spared at all except for energy and pretty much healthcare. On the one-day relative, you can see that right here. Energy, utilities are pretty much the only ones in the green. Healthcare was slightly red despite most of its major components being green. That's just because they had a gap up open and retraced the rest of the day. And then for the rest here, guys, a lot of big pullbacks happening in the markets here. On the 1 week relative, you can see that as well. A lot of pullbacks here, and mostly led by technology in the last few days. So how do we stand on a technical standpoint here, guys? Well, let's take a look at our major indexes first. So SPY, we were looking for this level right here. 468 is the line in the sand level. Bears are almost here. So when we see a daily uptrend where the last leg right here gets engulfed by the bears like this, you lose the 12 EMA. Well, an engulfing move to the downside means that probabilities wise, a likely scenario will just be a lower high than our previous high and potential lower low for continuation. The momentum is very, very strong. How do you know when your daily bounce is underway, guys? Keep an eye on your 4-hour time frame. I was telling you guys, watch the 12 EMA on the 4-hour. When we lose that in a significant way, your daily consolidation is underway. Now, how do we know that this daily leg down is potentially nearing its end and ready for a potential bounce? Well, keep an eye on your 4-hour oversold conditions. If we get too oversold on the 4-hour, that means that your daily bounce is likely underway. And then it's all a question of measuring the size of the bounce. Get a very, very small bounce and then retrace towards the lows. Well, most likely, guys, we're going to get the lower low pattern set. Daily downtrend will be set. And at that point, guys, it'll just be very healthy weekly consolidation on SPY. SPY, I'll remind you, anything above 454 is just looking for a higher low for further price continuation to the upside. So this is still a very beautiful weekly uptrend. And the big area of support here for SPY does come down between 460 and roughly the 450 level. So just keep an eye on that on SPY. Not quite ready for a daily bounce yet. Yes, we're slightly oversold here, but the 4-hour downtrend is very, very healthy for the bears right now. You have your moving averages acting as overhead resistance. Wouldn't be surprised if this continues for a potential one leg further into the lower lows. We may just flush this 468 level here and pretty much erase the daily uptrend by the bulls, set up for a potential daily downtrend. And that would just mean maybe a potential other week and a half of consolidation back into these levels. Now moving on to QQQ. QQQ actually did it first, right? So daily uptrend was well in motion, and now we've flushed the lows. 403 was the lows, and now you can see the bears have completely engulfed this. So the likely scenario now, any bounce is going to be for a lower high for potential lower low continuation for the daily downtrend here, right? Clear loss of the 12 EMA. And on the weekly is just in weekly consolidation mode at this point since we've lost the daily series of higher highs and higher lows. The daily downtrend is potentially being set by the bears. While we look one time frame higher, this is just very healthy weekly consolidation for the bulls. After 9 weeks of rally to the upside here, anything above 383 zone is just going to be looking for a higher low for further price continuation here into the end of January, as we've been predicting on the channel. Don't forget, we do have a couple of tech earnings here coming up end of January in the form of Netflix and Tesla. And then very early February, you will have the rest of big tech. So this would fairly line up with this chart right here in terms of a few more weeks of weekly pullback here. And then if we do get some bullish earnings, which I am expecting, this is when you get your guidance for the year. And I do think big tech will have some fairly good guidance for the year here. This is when you may get your little rebound. So keep a very close eye on this. The pullback zone for QQQ is between 394 and pretty much 382. Big area here. Chop zone, previous 52-week highs in 2023. Chop zone right here as well. So now this is the most likely area that the bulls can pull back into. But everything looking very healthy on a longer time frame point. And you can even see that on the monthly charts here, guys. Monthly bulls are in absolute full control. Now, XLF financials. XLF financials holding up better than most here, but starting to kind of taper off here. Struggling at the double top right here. So it remains to be seen. Can financials continue to carry the market, right? If financials would have literally started dropping off a cliff already, well, the SPY would be significantly more red. It would pretty much follow the QQQ pattern, right? It would have a much deeper cut. But since financials and healthcare have been so resilient over the past couple of days, that's why SPY is holding up better than your QQQ. But if for ever which reason, guys, we lose this daily 12 EMA here and start trending towards the lows, well, your line in the sand level is 3690. If we do flush 3690, the daily uptrend is pretty much lost at that point in favor of a potential daily downtrend by the bears here, which will bring us down here into this red box right here, which was our previous resistance for the longest time. That should be acting as a pretty decent support. Your 12 EMA is right at the lower end of this box here. So that's 37 all the way down to 36 level. Just looking for a weekly higher low if ever we do get the daily pullback and flush. So no red flags on financials, just some very healthy consolidation indeed. Now moving on to XLV Healthcare. XLV Healthcare still a little bit overbought here on the RSI and holding up better than the rest of your indexes, right? So nice, beautiful daily uptrend. Healthcare bulls have a lot more space than the rest of the market here. Anything pretty much above 132.66. Just looking for a daily higher low for further price continuation here. I do think healthcare is very, very well positioned for 2024. I think they will have a year of outperformance after having staying muted for the better part of the entire last year as a whole. So if we ever do lose the series of daily higher highs and higher lows, let's say we set a daily downtrend here leading into the next few weeks, that's okay, guys. Just looking for very healthy weekly pullback. Keep an eye, this yellow box right here, right? 136.50 all the way down to pretty much 133 area is going to be the area. Previous resistance in the past, big consolidation zone. So I do believe that is where the bulls can attain a little bit more support before continuing their rally into 2024. IWM Russell losing the daily uptrend, now confirmed at this point, right? Daily uptrend, higher highs, higher lows, higher highs. Now lower lows. We lost our most recent higher low. 196.33 was the line in the sand level that we were pointing out for the last couple of days. And now the bears have engulfed it. Loss of the 12 EMA. First time losing the 12 EMA pretty much since this rally pretty much started in November, right? So it has to be significant to us, guys. The bears are gaining momentum. They're gaining control of the shorter term timeframes. Now, the cut is so deep here, guys. take a look on the 4-hour, lightly oversold as well. So we could be potentially expecting a daily bounce to come in the next few days for our bulls here. But any daily bounce with such a deep engulfing move will just be for a lower high and potential continuation for the lower low. We need to measure the size of the bounce on all of these bounces when they will happen. But if the probabilities are anything to rely on, which we've been relying on, guys, for the longest time on the channel here, most likely scenario is pretty much a lower high, lower low continuation, daily downtrend continuation by the bears into further weekly consolidation in IWM Russell. IWM Russell, next target. Now that we've kind of came back through this area of previous resistance, right? We were not able to hold the close above and use it as support. We're now kind of trending below that right now, right? This was pretty much your 201 all the way down to 195. Your next stop, guys, needs to be pretty much the average of this whole zone, right? And the average is displayed by your moving averages as well. You see how all the moving averages are down here between 188 and pretty much 181. This area is going to be a very solid area of support if ever the bulls do choose to go down there. And that is also where I will be loading up some IWM Russell if we ever come back down there. Going to be looking for the weekly higher low for further trend continuation into 2024. The monthly is also looking very good as well. Just looking for a monthly higher low, maybe January, February, right? More than that, I would be very surprised if we get further consolidation than that. Looking for a bit of a monthly higher low here before the further ramp up. So everything looking very good here, guys. Just the bears gaining short-term momentum of our lower time frames. Now moving on to Dow Jones. Dow Jones also struggling to maintain here at the 12 EMA. Looking a bit like financials, right? Struggling with this little double top area. Bulls are still in control. It's still one of the rare indexes that's still in a daily uptrend here. Just looking for a daily higher low. Anything above 37,077, looking for the higher low. But if ever we flush this here, guys, and lose our daily uptrend in favor of the bears, just keep an eye on the momentum to the downside here, guys, right? If we ever do set up a daily downtrend, that's fine. Just looking for weekly consolidation. Beautiful 9-10 week rally by the Dow Jones here. Any pullback just for weekly consolidation. Keep an eye on your previous all-time highs here, guys. That's between pretty much 37,000 and about 36,400. The lower support area will be right down here, guys. 35,700 is your next target after that. But the bulls with so much space here, guys. Anything above 32.4. Just looking for a weekly higher low for further price continuation. And the monthly, I'll remind you, very beautiful monthly breakout as well. So some consolidation here, daily and weekly timeframes will not deter your longer term value bulls nonetheless. Now moving down to our major tech name. Actually, let's do a little bit of crypto here first, guys. A little bit of an event here in crypto, right? So we had a big liquidation break here of your lows, right? The bears came down and challenged this. This happens all the time in crypto, guys, where you get this 1 hour completely brutal sell-off. You can see this right here, right? From the morning, pretty much down almost 10% in under an hour. That's just classic crypto, classic liquidation breaks of structure here, but a bit of stop hunting by the big players as well. Bitcoin is still in this large tightening range. Bitcoin recovering ever so slightly in the day. So the daily time frame doesn't really show us anything meaningful, really just consolidating in this area right here. The weekly is still technically in a weekly bull flag, right? So we're not breaking the lows, not breaking the highs by too much or closing above, still in a weekly consolidation bull flag. So I'd like to see this range continue to tighten up here, and then eventually we will probably get a big meaningful break here, one or the other. Either way would be healthy, guys. If we break to the upside, well, it's just pretty much weekly uptrend continuation here. Keep an eye on your resistance level. That stays put 52,000 all the way down to about 46.5. It's a wide range, but that's pretty much the area coming in on this monthly chart. And if ever we start pulling back, if ever we lose this series and set the weekly downtrend, that's fine. That's just monthly consolidation. Beautiful monthly uptrend at this point would just be for a couple, maybe 1 or 2 months of monthly consolidation back down here. My sweet spot for Bitcoin personally is down here in this range, 37 down to about 36,000. If we visit those areas, guys, it will be definitely loading up a bit more for the monthly higher low for further price increase into 2024. Very bullish halving event happening in April, and with a lot of risk on money, I believe that's coming in into not only stocks, but most likely crypto as well. With decreasing interest rates this year, I would not be surprised if Bitcoin is really poised to just continue this rally pretty much all of 2024. May not get the exponential run like we have, but the monthly upswing is looking very decent indeed. Ethereum is pretty much all the same here, guys, right? Very wide range of consolidation here at the top. We tried to set the daily uptrend here, but the bears came right back, set the daily downtrend, but we're really just range bound between pretty much your 2,400 and about 2,150 area, right? So very decent weekly consolidation as well. Like to see the charts consolidate here at the higher price ranges. At least the bulls have not given back too much, but if ever which reason, guys, we do break these lows here, 2130-ish, we will be in a weekly downtrend. My sweet spot for Ethereum, 2100 all the way down to about 1950 is the buy zone for me. Why? Just going to be looking for the monthly higher low as well. Monthly moving averages are down there pretty much at around your $1,950, $2,000 area. If we do come down there on Ethereum, I will definitely be buying a bit more. But for now, just some very healthy sideways consolidation, pretty much waiting for some ETF news, waiting for the Bitcoin halving event, and waiting for a bit more risk on sentiment in the market. So crypto still consolidating. Now let's move on to our major tech names. So Apple here. Apple, once again today, down almost another % here, guys. So your daily downtrend on Apple does continue. Quickly approaching my sweet spot here, 181 all the way down to about 175 is where I would like to pick up Apple personally. I do believe it's going to be very hard for the bears to break through that area indeed, right? Why? Because it's a big previous area here coming up on the monthly lows, right? So if we come back down into the mid 170 areas, that's an area where I do like to pick up Apple here. But as of now, the bears are in short-term control here. 4-hour time frame, deeply oversold. So a daily bounce potentially is underway. Now, when we get this potential daily bounce, as soon as this move bottoms out, we're going to measure the size of the bounce. How high in relation to our previous lower high here, 194.50, how high does the bounce get? If you want to see the bulls be able to reshape this into a daily uptrend, well, we need to recapture, guys, about more than 61% of the move here. And this would put us above 190.5. So as the bulls can bounce all the way back to $191, they have a good shot at setting up a daily uptrend reversal. But if we top out, let's say 187, 190, and then continue trending to the downside, the probabilities do favor a lower low setup as well, continuation of the daily downtrend. So the size of the bounce is key, guy. It's one thing to know if the bounce is coming, like we identified on the 4-hour time frame, deeply oversold on Apple. Apple doesn't stay deeply oversold on the 4-hour for too long at all. But once we know the daily bounce is coming, we need to measure the size of the bounce, because now in a daily downtrend, your expected move is just for a lower high and lower low continuation here until the bulls put in enough of a bounce on a most recent down leg that they have the space now to set up for a daily trend reversal here. So Apple still consolidating right now, still weekly consolidation as well, loss of the weekly uptrend here. So once your daily bounce will be underway, we will see as well, if they do set up a daily uptrend, at that point, you'll be looking for the size of the weekly bounce as well, just as we did right here, right? And then we see how the price continues. So Apple looking very good in terms of consolidation. If you are looking for some buy territory, keep an eye, guys, in the lower 180s all the way down to about 175. That is where I'm expecting Apple to potentially go if the market sell-off does continue here. No earnings on Apple until pretty much the next 3 weeks here. So that will be Thursday, January 25th as a whole. Now moving on to AMD. AMD also with some beautiful consolidation, quickly approaching my buy area, guys. 132 all the way to 128 is going to be an area where I will throw a few shares at AMD. So AMD daily uptrend here now being canceled by the bears here. So they did break your higher low area. 135.67 was the mark. Now the bears with the engulfing move. Whenever you see an engulfing move, guys, most likely scenario, as soon as we start a bounce, are we oversold on the 4-hour? We are oversold on the 4-hour. So let's say we get a daily bounce underway. You are just looking for a lower high compared to here, right? Lower high for lower low continuation for a potential daily downtrend. That is the expected move. Now, we measure the size of the bounce. The bulls can always undo this expected move by putting in a heck of a bounce. Then you increase the probabilities for a higher low and daily trend reversal. But as of now, the probabilities do favor daily downtrend continuation. So any bounce from here, looking for the lower high, then we will see are the bears going to flush this into lower low territory. 132 down to 128 is my sweet spot. If we do continue for some reason this daily downtrend here, well, I'm looking for the weekly higher low. Weekly uptrend is looking beautiful on AMD at this point. Target this area right here. Anything above 116.40, just looking for a weekly higher low for further price continuation. On the monthly, guys, monthly breakout is fully confirmed at this point. So even if January and even early February are a bit negative here, bring us down to the lower 130s, even 125 area, it is still a buying opportunity for your higher time frame bulls. So very juicy sell-off on AMD indeed. We'll definitely be looking to pick up some shares if we do trend lower into this area right here. Now moving on to Amazon. Let me get some coffee. So Amazon pulling into our area of support after having lost pretty much your daily bull flag consolidation here to the downside. Bear setting up the daily downtrend right here, clear as day. We are trending in to our area of support. So daily downtrend confirmed at this point. Any single bounce from this area should just be for a lower high for potential lower low continuation here by the bears until the bulls put in a high enough of a bounce on one of these down legs, right? Usually the legs get smaller and smaller, and then you'll see the bulls will put in enough of a move to create the space for a daily uptrend reversal pattern, and that's when you know your move is finished pretty much, guys. It's always the same, but we just haven't seen it for the last 2 months in the market, so I figured I should bring this back to you. August, September, and October were clear technical scenarios where all of this was playing out, and I do think we bought the dip perfectly during that time as well. Amazon, for the most part, still a weekly uptrend. Any move lower, this is now weekly consolidation, right? Daily downtrend being set. Well, your weekly consolidation is underway here, guys. Anything above 143 is just going to be looking for a weekly higher low for further price continuation. 148 down to about that same level, 143. It's a big chop zone here, guys, for Amazon, right? Previous resistance here, been a chop area as the price tried to break through right now, so it should be acting as support. You have your weekly 12 EMA down there as well, so going to be tough for the bears to break through this area in one clean shot, in my opinion. And Amazon as well, in terms of the monthly breakout is looking very juicy. So all of these dips are just for long-term bulls to be pretty much acquiring more shares, and I will be doing exactly the same. The lower that we drop on Amazon, I will continue to add more Amazon shares. I think 2024 is going to be a very bullish year. 2024, 2025 should be the years for Amazon to really have some outperformance, so looking forward to that. Now moving on to Google. Google actually green when the rest of the market pretty much red. So Google with a nice little day here. Google was always in a daily uptrend still. So your daily higher low is set with yesterday's close, pretty much 137.70. Just going to be looking to proceed north here. We'll see, can the bulls start retesting your 52-week highs here? Or will the bears be set up for a daily downtrend like the rest of the market? So daily bounce is key here, but daily uptrend is still looking very healthy on Google, and on the weekly you can see even better. They're still above this area between these two yellow lines. Yellow lines are 140 down to about 138. This was a very big area of resistance in the past. The bulls are currently using it beautifully as support. Weekly uptrend is confirmed, looking for a weekly higher low. Anything above 129.40, just a weekly higher low for price continuation into 2024 here. Google looking very good on the monthly as well. Monthly breakout is pretty much well underway at this point too. So all of this consolidation here, guys, beautiful area for Google bulls to be defending as support here. Obviously, you guys know in the trading account, I do have a position on Google. My average cost now on those are down to 131.40. I also have some Google shares in my long-term account that pretty much I don't touch, just add to. But in terms of the trading shares, very comfortable position here. If we do trend, if for some reason, guys, we get a daily downtrend here and trend lower and get a bit more weekly consolidation here, potentially down to the mid 130s once again, I'll be picking up even more Google, because I do believe 2024 is going to be a very aggressive year for Google bulls as well. Now moving on to Meta. Meta consolidating a little bit here, 0.53% to the downside, but that's okay, guys. Meta bulls with still a lot of space. Meta actually with one of the more bullish charts in terms of how much space they have to pull back on the daily here. So anything above 328.84, let's call it 329, is just going to be looking for a daily higher low. But the more that the bears pull back, the more that the bears engulf, they open the door to set the lower high for lower low continuation. If for ever which reason we're not able to continue this daily uptrend to the upside and the bears do set the daily downtrend, that's fine. Just going to be, once again, for weekly consolidation. You guys know the drill. Weeklies are key here to know who's in control. So weekly consolidation, anything above 315, just looking for a weekly higher low for further price continuation. You have beautiful horizontal support right here around 338, and you have your moving average here as well at around 333. And look how well Meta has held this 12 EMA on the weekly, pretty much all of 2023 combined here. So looking very good on Meta. Healthy pullback indeed here. And in terms of the weekly trend continuation here, if we get our weekly higher low, I said once again here, guys, we cracked this most recent support here. We're still breaking above it on the monthly currently. So the next area, guys, when Meta is through this little area of consolidation, the next area they're going for is the all-time high. So Meta looking better than most. Now Microsoft flat on the day here, still consolidating in our range here, guys. So the analysis does not change on Microsoft. If Microsoft gets dragged down by the rest of the market and sets a daily downtrend, that is more than okay, guys. Yes, it would signify a weekly downtrend as well. A break of your lower range here, 365, would be a weekly downtrend, but that's fine. Why is it fine? Zoom out one time frame higher. Who is in control of this chart? The bulls have the monthly uptrend. Any consolidation here is just a monthly bull flag for further price continuation into 2024. We have our big area here. This is the sweet spot for Microsoft. If it comes down here, I will definitely be opening a few swing trades on Microsoft. 355 all the way down to 340 is the area I'm looking for. Previous all-time highs, previous 52-week highs as well, and all-time highs. And now that we're through that area, I do believe the bulls are going to be able to play some very hefty defense within that zone here. So the bulls are in full control here, guys. And obviously, the easy scenario would just be a break of this to the upside. Your daily uptrend would continue. Your weekly lows would be set for a new weekly uptrend continuation here into leg pretty much 1 to leg number 3. And then your monthly uptrend simply just continues, right? So the bearish case scenario just brings me down to buy more Microsoft shares, and the bullish case scenario just allows me to hold and continue share appreciation on the Microsoft shares that I already have. This company is so bullish here, guys. Everything they're doing, their balance sheet, they have one of the most solid balance sheets in the entire industry, which is why I say, guys, any extended dips on Microsoft are going to be buying opportunities for larger form institutional investors and a lot of DCA retail investors as well. Now let's move on to Netflix. Netflix recovering a little bit here today after having a brutal sell-off here, almost 4% yesterday here, so up 0.38% to the upside here. Netflix in a bit of a precarious situation right here, right? So we had the daily uptrend going, and now they've lost it into the daily downtrend. So daily downtrend is set by the bears here. Any bounce just going to be looking for a lower high for potential daily downtrend continuation with the rest of the market here. But Netflix is set up fairly good on the weekly here. We have a big area, guys, down here as going to be acting as support. That's 450 all the way down to about 425 is going to be the most likely area where I do see this pullback coming in. Netflix has a nice weekly uptrend here going, but I don't like how short this second weekly move up. Big weekly leg up. Now, leg number 2 was quite short, and now in a quick amount of time here, guys, the bulls are giving up too much territory here. So we're going to be looking if the bears can smash this area right here. 447 is going to be the area to watch. If ever we do lose the weekly uptrend by the bears coming down all the way here, well, we have to look up to the monthly, and the monthly at least is still very healthy, right? Monthly uptrend here by Netflix, monthly further leg up here, smashing the 52-week highs. Anything above 345 is just going to be for a monthly higher low for further price continuation here, guys. And that's why these two lines are crucial, these two yellow lines. I do believe that it's a very juicy area, guys. Even if we lose the weekly here, I do believe this is the area where the bulls are going to be able to put in a bit of a trap here for the bears and be able to reverse this only because we're in control here of the longer term monthly time frame. So Netflix looking good. If we can come back into this area, guys, I may be making some plays on Netflix as well. But for the time being, bulls are holding their own. Just keep an eye for the daily downtrend continuation here into that zone. This is the sweet spot zone that I'm looking for. But as of now, guys, the bulls still control the weekly here, looking just for a higher low for further trend continuation. So keep an eye on that for Netflix. Now moving on to NVIDIA. NVIDIA looking dicey here, guys. Daily downtrend now clearly set by the bears right here. So daily downtrend confirmed. At that point, we just zoom out to the weekly chart here. So weekly, I told you guys, keep an eye, guys, on the 450 area. Absolutely crucial. Lose it, and you set the weekly downtrend. At that point, guys, we would just be due for more monthly consolidation on NVIDIA, right? Company doesn't have earnings to save them for quite a while here. We're talking about the 21st of February. So that's why this 450 area is going to be absolutely crucial for the bulls to protect here if we don't want to go into some more extended consolidation. I mean, if we ever do get extended consolidation here, we lose this 12 EMA, we lose these lows right here, send into weekly consolidation towards the downside. The closer we get to 400, guys, the more attracted I am to loading up some NVIDIA for 2024. Their earnings this year are supposed to be absolutely gorgeous, so no red flags in that aspect. Just a little bit of a technical weakness here recently. You can see so much struggle of breaking these all-time highs, right? So as of now, the bulls are still in control of your major timeframes here, still in control of the monthly, right? Monthly tightening range, otherwise known as a bull flag here. And also in control of the weekly, just keep an eye on this 450 area, right? So really crucial that they protect that. In terms of the daily, we're not really oversold at all. Even on the 4-hour time frame, you can see that we're not very oversold on NVIDIA either. So the bears are in control of the short-term time frames here. Any move higher here will just be potentially for a lower high in relation to your 498 level for lower low continuation. And then it's really up to the bulls to defend that 450 on your weekly. So NVIDIA, not looking too bad, but I wouldn't be opposed for it coming down 450 and below here, guys. I would like to see that for myself personally as a buying opportunity because the long-term bulls are in control and the earnings through the next 3-4 years are absolutely phenomenal. So any longer form pullback here will be for a dip buying opportunity for long-term portfolios. Now let's move down to Tesla. So Tesla here, guys, heck of a pullback on Tesla the last 4 days here, guys, right? After cracking our famous area of 458, look at this pullback, top to bottom. We're talking about 10.5% on Tesla in the last couple of days after struggling with this range so much and now finally breaking above it. Well, the bears engulf now, setting up for a potential daily downtrend. So daily uptrend was confirmed. Now we've engulfed. We flushed the most recent low here, 247. Now the bears have a chance. As soon as we get a daily bounce underway here, going to be looking for a lower high, anything under 265, lower high, potential lower low into the bottom end of this range. We have earnings here coming up in a couple Wednesdays, so we're going to be very curious to see. I think that this earnings is really going to take us either through the bottom of this range and load me up potentially for the very juicy buying opportunity for Tesla. Anywhere 220 all the way down to 200 is going to be a heck of a buying opportunity for 2024, assuming their record deliveries and that they just had in Q4 and the bullish guidance that they are potentially going to give here in Q1 for the year as well, with rates coming down and potentially demand being stimulated. So I do believe we're ending the bottom of Tesla's cyclical rate cycle right now. And I do believe it's going to be a very juicy buying opportunity if ever the market presents us with some more prices between 230 and 200 for a long-term portfolio position here. So very, very juicy buying opportunity coming up on Tesla here. It always sucks to lose a daily uptrend so quickly into a daily downtrend here, but what can you do? 4-hour time frame here, almost oversold. So we will be looking out for potential 4-hour recovery here into our daily bounce. But even that, the bears have taken back so much, guys, just expecting a lower high for potential lower low continuation here of the daily downtrend. On the weekly, guys, the bulls still have a bit of space here. We're talking 227 is going to be the line in the sand level here, right? The weekly uptrend was confirmed, so the bulls really need to protect this area. Potentially, the best case scenario would be for them to set a temporary double bottom here and continue just to tighten up in a weekly range if ever earnings aren't what Wall Street is expecting here. If ever we lose this area, well, your weekly uptrend is lost. Your monthly consolidation just simply continues on Tesla and it will further tighten up here. But anything, guys, the closer we get, pretty much 220 down to 200, in my opinion, is a very good buying opportunity for long-term Tesla shareholders, even for some little swing trades with some options. Now moving on to Palantir. Palantir really flushing here, guys, right? So Palantir was one of our first tech names to start this sell-off earlier in November. And from that November high, we're actually down almost 27%. So Palantir now quickly coming down almost into the $15 range. We haven't seen $15 range since on Palantir since the last earnings, right? Since pretty much end of October when we had that big market sell-off. So now it's coming down into the juiciest buying opportunity territory, in my opinion. And now the daily bears are in full control, right? Daily downtrend was reconfirmed by the bears. So any bounce at this point, right? Daily is still not oversold. Let's check on the 4-hour. 4-hour is deeply oversold. So let's say we get a 4-hour recovery here, 4-hour uptrend, your daily bounce will be under motion. But the bears, with such a big move to the downside, the probability states we may just be expecting a lower high for lower low continuation. It's all in the size of the bounce for all of these charts, guys. When we start bouncing, size of the bounce is key. For now, just daily and weekly consolidation is underway. You will also have this whole $17 area, which was previous support. Well, now, unfortunately, it may be acting as resistance as well here, and it may just be time for the bulls to form a bigger base of support down in the $15 to roughly $14 range. If we do get down into there, guys, this is what I've been waiting for. That's why I closed my $17.50 options over the past 2 weeks. I didn't want to take the risk of the early January pullback, and Palantir still not recovering yet. So I did a good job here. I do have my 200 shares here with an average of 1734 for the swing trade. If we come down to this area, guys, and we'll be playing Palantir fairly heavily. You'll see about 8 to 10 contracts being written pretty much every single week that we're trading between the $15.50 to $14 range. That's a very juicy area for me. Weekly, unfortunately, guys, now weekly downtrend is set by the bears, right? We had a beautiful weekly uptrend right now, but weekly downtrend most recently set in the last 2 weeks of trading, especially this week with the break of your $17 support, right? Weekly downtrend is clear as day at this point. So we will be looking out to this whole lower area as our lower bound of support. And unfortunately, Palantir not able to complete the monthly breakout just yet. So the monthly chart will just continue to tighten up here, guys. It's been a while that we've been trading between this $13 and $20 range, right? So that is pretty much everything for Palantir. Keep an eye on your lower range. I do still believe this lower range represents an excellent buying opportunity for swing trades for myself here into 2024. Palantir should be having a very good year, very, very solid EPS growth and potential S&P 500 inclusion. So a couple big catalysts coming up for Palantir as they continue expanding their business. And lastly, PayPal. PayPal, heck of a down day on PayPal. No reason whatsoever, no company specific news. PayPal just falling off a cliff, right? It was a tightening daily bull flag here. Now, unfortunately, losing losing it right now. So bulls have really given up everything here. They gave up the daily bull flag. They gave up the 12 EMA, not looking very good at all. And now we're also trending towards the lower end of our support area, right? We were targeting this area, guys, 60 all the way down to about $58 was a very big area of resistance that it took us a while to get through, right? And took us a while to get through here, the downside as well. And now we'll be looking to this area. Can it continue to act as support, or will the bears make quick work of that? Now, with such a big bear move to the downside, guys, may be expecting a lower high for lower low continuation here at this point. The 4-hour trend is currently oversold as well. So if we do get a 4-hour bounce underway, the 4-hour bounce, 4-hour uptrend underway, your daily bounce will be set. We'll be measuring the size of the bounce in relation to your 63.37. If the bounce isn't high enough, may just end up with daily downtrend continuation here, and then the weekly consolidation will be continuing. PayPal had a very good rally here on the weekly, but now potentially losing your weekly moving averages. We'll be looking to set a weekly lower high, a weekly higher low, anything above 50.31. We'll just be looking for a weekly higher low for further trend continuation into 2024. So longer term timeframes for PayPal still looking good. Value of the company still looking good. Growth prospects still looking good. Their customer base is still there and growing as well. So all fundamental signs are very bullish for PayPal. It's just the stock is a bit of a cyclical one with interest rates. So I do believe that a major catalyst for PayPal will be when rates officially do come down. There will obviously be a bit of lag effects. So very curious to see what their guidance, given all those macro things coming in this year, their guidance here Tuesday, 30th of January for earnings will be very, very crucial for the company here. That now we absolutely need to protect, guys. This 57 level is going to be crucial for PayPal to protect. If ever we trend lower and lower, guys, I will be adding more shares of PayPal. Anything under 55 all the way down to $50 is an extreme buy for me. So hopefully, guys, that everything like that was helpful. If you did appreciate the video, guys, consider dropping a like. It really helps me out for the algorithm. And if you're new here, consider subscribing to the channel here, guys. We would love to have you do these daily market updates pretty much every single day after the close. Tomorrow, if the sell-off does continue, guys, I will get together a little bit of a list of stocks to do. I already got together a list pretty much last week here. Don't miss these 13 stocks in 2024. So the first 15 minutes of the video goes over those stocks. A lot of those stocks have continued selling off here. Very juicy buying opportunities for a number of them. And we'll also be looking with the most recent sell-off of the past couple of days. If it continues here, trust me, I will have your guys' back. I will get together another list of the stocks that are pretty much at retest levels, right? We talked about Fortinet, how it was pretty much a breakout and retest of our sweet spot here. There's a couple of them that have broken out of our sweet spots and now coming down for a little bit of a retest here that I'm looking at. So a couple of them will be fair game for some dip buying opportunities. So going to be taking a look at most of those here tomorrow and Friday, see how we end the week with potentially another red week next week for just more weekly consolidation here. Bulls with a lot of space to give in terms of that. We also have CPI next week, so going to be a big week. And as usual here, guys, if you have any questions, right? Macro, TA, options, stocks, don't hesitate to let me know. And I will also be putting out a list of potential call option plays that I'm also looking at. I gave a few away on the channel already, but I do have a list of about 7 to 10 stocks. Very, very solid stocks, guys. I don't usually play call options on extreme growth stocks that aren't yet profitable yet. I'm more of a conservative call option person. Even if I am doing leaps, I will always go with about 80, 85 delta leaps and just looking to use the options as leverage, right? Not looking to make 10, 20, 30x gains on options plays with short-term weeklies. We're really just looking to use options as leverage as they were designed to do, just being allowed to get a position in a stock for cheaper than buying the shares outright and then riding it as the share price appreciates without getting absolutely destroyed by theta. So that's pretty much everything here, guys. I'll see you guys tomorrow after the close. Take care and peace.